Colin, it's weird to have you here and not talk Tesla, but also somewhat refreshing. Tell me what's going on in the solar space.
There's a handful of things. First, solar's really come down the cost curve over the last decade plus. The point where about half the country, it's really economic for folks to go solar rather than pay their utility electric bills. More importantly, we're seeing energy storage prices come down as electric vehicle capacity ramps up, which means in our view about 20% of the country could go off-grid completely with a solar plus storage system. Now, when we do that analysis, we're assuming a 6% discount rate on those cash flows, but with lower interest rates, which look like they're going to be here for a little while, we think 4% might be more appropriate, and those numbers bump up to close to 40% on the solar plus storage, and about 7% of the country for just solar alone. So we look for economics that makes sense.
We looked into the solar plus storage option, and it wasn't really viable. I mean, we would have needed multiple power walls or some kind of battery in order to truly have enough power to live off of in the case of a shutdown for a few days. You still have to connect to the grid. There's all sorts of rules about going back and forth. But let me put all that aside, because I mean, obviously, society is heading in this direction. None of that, to me, still explains the move this year. I mean, is it simply retail interest? Is it the fact that people are realizing, the Fed is lifting all boats? I mean, we've really gone up sharply of late.
So there's two things that we think have happened this year. So one, we think there was a lack of understanding around the sector, and there's been an increase of money coming into the space given ESG mandates and growth in that space, with environmental PCs really focused on growth and that being a key part. But really, interest rates are incredibly important for this industry, given the high leverage to those interest rates. And when you look at the biggest lever in the supply chain, it really is your cost of capital. And so as you see loan to value rates go higher, closer to 80-85% on these systems, and interest rates come down, there's an awful lot of leverage. I would actually differ with you in terms of the cost structure on that technology. We can get into that another time, but I do think these are compelling economics with an industry that's going to disrupt the utility industry over the next 5 to 10 years.
And for many people, they might just be listening to the fact that you said low interest rates equals high prices for the solar stocks, and that's just another way to play it. And silver, by the way, which has been rallying sharply, is one of this industry is one of its big end users of silver, correct?
Not really. I mean, silver's really gotten designed out of all of these designs over 5 to 7 years ago, where there was a silver-based issue, and so folks have found new materials, and that's really not an issue as a headwind on the cost structure.